Hey everybody, just waiting for the bitrate to catch up on X and YouTube. Seems to be going pretty good, but always have to double check. There's something out here. Um, see if this works. All right, cool. Welcome everybody to Sydney Tokyo Overlap with SPDas, Elliot Wave Theory Trader, Professional. There's a couple of points here before we get started. We're testing out the avatar system. These are going to be connected in the process of being connected to the actual AI agents. We're hoping to get not just the agents, their own real-time avatars in the portal, but also our traders. That should be a lot more fun. And of course, that comes with a bunch of cool features that will be extrapolating into the system and into the XR system. What's really cool about this is that this is also mobile friendly and it's programmed with a hybrid of low-level code and some other systems as well. So it's pretty neat what we can do with it. And yeah, the actual overlays for the avatars are going to be a lot of fun. We're working with some cool artists who are going to be collaborating on that. So really excited to share that once that's more refined. You'll see my avatar here take over. Of course, that comes with some cool interaction benefits as well. So once you're in the XR portal, you'll be able to interact with things and each other. But yeah, I won't get into too much details on how that's going to work, but it's going to be a lot of fun being in that trading room, especially with other traders and holders. So without further ado, I'm just going to switch over. Pardon me. I'm just going to switch over to SPDas. Just a moment. Make something out here. I see. Okay. Okay, I'll just leave that alone. Without further ado, let's switch over to SPDas and get the session started. We'll play around with this a little bit later on.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.
SPDas, we're ready for you anytime you're ready.
Oh yeah, I'm ready as well. Thank you, Igor, and welcome back. Welcome back, everyone. We're now into the Tokyo Sydney overlap. So as we normally start our first session with the larger degree wave count, that's what I've brought up here. We'll start off with the Euro USD for just keeping in mind that the structure is a classic Elliott wave pattern, which is 5 up, that's an impulse, followed by 3 down, which is an ABC correction. It's at a larger degree, that's why it's at a minor degree and taken several years to unfold. But the pattern is important, but we just need to keep the pattern in mind. This pattern suggests that the next move, which is the wave C, has bounced from the 61.8%, and it's also completing the corrective move 535 or 335. We can count one, two, three, four, and five waves clearly. The last wave was a diagonal. So, if all this is done properly and if we are not correct in judging this move, then the next larger degree move should be higher again towards the larger degree trend. This is the larger degree trend, higher on the upside. So from 1.0177, which was low registered last Friday, we are now moving five waves up. All right, uh, almost the same magnitude. So the target should be around 1300 to 1500 over a period of several weeks to come. Sorry. So that's the larger picture. And now let's go back to the hourly chart where we have been quite busy since last 24 hours at least. Right from that particular small pattern, which was identified as wave one and two, and then we are just beginning to cut loose on the third wave. Now, do you see the third wave complete? Uh, that is one, two, three, four, and five. Even the last session, New York session, we were targeting that the third wave should complete around 1.03 double one handle. It's quite possible that we might, if what we have done this is correct. I mean, if it's not the third wave, it could also be the first impulse complete. All right, and yeah. So if the first impulse is complete, which was what I expected, that is the path now, which has already been taken. So I'm going to remove that projected path which we did earlier, and I'm going to push this slightly on the right hand side so that we we now have cleared the price action path. Ideally, it should a pullback and then a new high. I mean, the next target now ideally is towards 1.0450. So we've hit the first one, okay, and the path is almost it's followed exactly as we were proposing it, and it's not we who were proposing it; it's the Elliott wave model. We are just following that particular model. The more closer you are following it, the more precise we will be. So the first step is done. Now, the trading point of view, aggressive traders are already on. Short-term traders might want to take some profits off the desk, partial profits, but don't be completely out. You never know. Retracements could be very shallow, and we could miss the bus completely. All right. And those who have waited for the price action to complete, now we've got that price action signal as well. So see how beautifully the story has unfolded in the past 36 hours or so. We were targeting 1.0311. We've almost achieved that. Now wait for a corrective drop and then the next wave up higher. All right. So euro is now good to be on the long side. any time, whether you want to initiate partial here or and remaining around the corrective mode, that is, yeah, absolutely up to you. And the stop loss goes to 1.0100, at least for now. The moment we hit 1.0450, we can move the stop loss to a not a break even, but we can move it to the low and then allow retracement. So we'll take it step by step, and we'll also progressively move the stop loss higher so that you understand when while we trade the entire cycle, uh, the trading strategy will be absolutely crystal clear. All right. So let's move on to the dollar index now. Before that, for those who wanted to have a signal on the daily chart, it's a candlestick pattern. We were we were referring to what happens. ideally after the indecisive pattern appeared, all right, and what we discussed in the previous session, the New York. Do you see that the market has rallied all the way towards 1.03 handle, and it has closed around that part, and that's a classic. I'm zooming out a bit for us to clearly see that classic morning star pattern which is unfolded by the chart. So now the markets are clearly telling us a story that, hey, I have bounced right from the 61.8%. The entire cycle, 3.5 or 4.5 month cycle is complete now. 3.5 months or 4.5 months, whichever. September last week it was. We were here, 25th of September. So it's about 3.5 months, right? That cycle is complete. I'm beginning to turn higher now. So why don't you look out to buy me? This is what the story is from the market, and I think we have got it on the right side. And the only thing we now need to do is to hold on to our emotions and hold on to our long positions because it's going to go long. All right. Now let's take up the dollar index. I mean, normally the dollar index would be opposite the euro. That is quite obvious. But the reason why I always like to touch base with the dollar index is once you know the dollar index projected move, you get a realistic picture of all the dollar crosses. You talk about dollar JPY or you talk about other crosses where the dollar is involved as a major or minor leg. So the idea comes across your the across all dollar crosses, and that's why, because if I'm not trading actively dollar JPY, maybe you might be trading. So once we know broad dollar index, we can place ourselves accordingly to the crosses as well. I'm not moving the Fibonacci and the projected path, but the larger degree counts are quite clear. 5 waves down, that's the larger degree trend, which is lower. And now we have the ABC corrective move higher as well, complete. All right. So the next move is going to be 5 waves down of the same magnitude towards the higher trend, which is lower from here. All right. So the overall trend is lower from here, and that is the projected path. So 1, 2, 3, 4, 5 was done. So what I'm going to do is I'm going to remove that just for the sake of some more space and clarity. The dollar index has almost taken out the first target around 109.07. It's just a few points away, just 10 points away, and I think that's okay. So it's I think this is also done. So let's bring it over here. Maybe now we need a pullback, and the next target now for the dollar index we can set it as, let me remove that target as well. We need to clear the screens a bit. So there you are. So the first target has been met. This arrow is almost gone. Now we wait for a corrective pullback, and the next target that we can set now is fourth wave of one lesser degree, which is 107.75. We are midweek right now, Wednesday. You never know. Thursday and Friday, maybe price action, or to Wednesday, Thursday, and Friday, the price action could revolve between 109.07 and a pullback. Monday, after the event, Jan 20th, maybe we can continue dropping lower or something like that. I don't know exactly. Or is it going to go until Friday, complete 107.75? 20th it rallies for the wave 2, takes another 5 days or so, brings us to the last week of Jan, and that is when we are set up neatly for the third wave to be covered up in Feb, right? But we'll come to know. But the time is always tricky. If we can get hold of the price properly, then the time will take care of itself. I think we are on the right track on the time. Okay. So the trading point of view, if you are aggressively short 110, fine, you can remain short. If you have not done, the price action is almost there now, so you can sell partial or and the remaining on a pullback, whichever strategy you want. It's okay. Uh, the bottom line is you've got to have the stop loss just above 110.30 to stay away from the noise. The dollar index broadly turning lower with a good price action confirmation. The step by step, we have got the price action confirmation as well. All right, and I'm sure that will be the case in pound as well. Yesterday, when we were in the New York Open, that was what a potential buy. Longs have been triggered around the 2180, so I'm going to move it there, and I'm going to cut short the wave as well. Okay, you never know that that is a corrective wave or corrective rally. So you never know if it is going to continue from here or it's going to make wave 2 a bit more complex as a triangle. But we'll come to know as the price action unfolds. We'll keep the trajectory of path intact for pound. All right. We are on the long side pound, long side euro, and short the dollar index. Obviously, we are short dollar JPY as well. All right. Let's see what the metal has been doing. Wow, amazing, isn't it? So it's so amazing. So that orange arrow, which we were discussing in the New York, is done now. I think we got up to 81 or or 80, and that's where we were proposed to go. Maybe one more high because I see a three wave movement. You see, it's a one, two, three, maybe a lower degree wave, 4 and 5. That would complete the wave C. Wave C subdivides into 5 waves. So maybe one more high towards the 80s, and I think we should good to go on the short side. So that's the projected territory, short term, okay? And the trading point of view now, we were discussing that we will get some chance to enter the short side around the 80, 78, 80 mark. We are there now. So if you have entered short positions, it's good. If you have not yet entered, you might do it now or maybe partial now and partial around the 80 mark. Ideally, you should place your stop loss around 27.30 to be on the safer side right here. And or you might keep your stop loss above 70 or 2700 plus. I've kept mine over here 27.31. And let's target towards 26.20 to take our first profits off the desk in gold. We are keeping options open for a triangle to materialize, and maybe when the triangle is complete, the fifth wave is going to go. That's the bigger picture, correct? We are waiting for minor wave 4 to complete, and before that, before the minor wave 5 rally begins. So gold is also quite a bit on track, and let's touch base with the dollar, with Dow Jones, and followed by coins. Okay, the Dow Jones also no change there. It's time for the Dow to take a breather anytime soon now. it's it's probably the first wave complete. I think I can we can also project the other side divergence here. You see that divergence? So that's the last wave possibly. And if you remember the triangle termination point, we were talking the minimum move should be around 42,659. That was a triangle termination move, A, B, C, D, E, and it's really amazing how these patterns unfold, and all thanks to Mr. R. and Elliot, who devised this as the Elliott wave principle and laid the foundation in 1938, which we are taking advantage and benefit of. All right, so that is A, B, C, D, E triangle. The triangle test is almost done. Maybe one last push higher, and that should give way to the corrective decline, and then the third wave or C wave. So we are, I think, by the time the C wave is complete, we should be around the 20th of Jan. So does it mean that the inauguration ceremony or the swearing in is going to follow? It's going to be followed by a fierce, severe reversal. Third waves, tell you what, third waves means business. They don't waste time. They have no time to waste at all. And when the third wave resumes or begins, uh, we cannot afford to stay out. I mean, and if the third wave is extending, then we have to simply take a position and then sit back and relax. Because maybe during the weekend I'll cut short a video and tell you how the third wave unfolded in 2007-8 crash. All right, how the third waves unfold and how far they go. Uh, I think it's necessary, so I'll cut short a video on Saturday, and we can post it here so that you can view how powerful the third waves are. Okay, so stay tuned for the Dow magnitude on the short side. Okay, sorry for those who are very bullish, but this is what the charts are saying, and we just need to follow that. Okay, coins now. They're taking a breather. No much change from what we saw in the previous session, and maybe one more high before the drop continues or the correction continues. But it's good to remain on the long side in Bitcoin now with a stop loss around 87 or just below that. The targets are well projected and placed around 110. That should be the first one. All right, that's the first one. Just above the previous high, a print of 113 should not be far away from here. But we need to see a corrective decline before the third wave begins. So if you're not entered into the trade, don't rush into the trade or go back into the price action. It could be the correction has already begun. I think that there's a three wave down which we can see, which is wave A, and now there's another three wave up, which is wave B. Ideally, the prices should reverse from here itself. Let me bring up the 15 minutes time frame. It's a flat which is being unfolded. So it's three down and then a possible three up. And the next move should be five down lower. Uh, let's try and project. It's a standard flat where wave B is going quite close to the wave A, beginning of wave A, and if the numbers are correctly done, then we should be back towards 92, 93 anytime soon now. The next move is projected towards 92, 93. So hold on to your guns if you're not on the trade. Maybe we'll get an entry, better entry around 92, 93. Okay. Ethereum should be on the same lines. I think it must have taken the resistance out, or not yet, but it's okay. I think it's pushing higher now, beginning to push higher. While Bitcoin also prints a new high and then declines. But sorry, in a nutshell, we are good to remain on the long side with this. I mean, don't forget the stop loss, please. The stop goes just below the 2900 handle. I mean, I'm a bit skeptical on Ethereum because it's not taken the previous resistance. Now, once it does that, the confidence will rise. Not always it happens, but if it does that, it's a good sign, right? But the longs are on track towards 4300 up there. Okay, so now it's also doing the same thing. Less price action seen in the past few hours. We are just about the same price where we were in during the New York Open, and just wait for a corrective decline back towards 182 or 180. Yeah, 182. Stop loss goes just below that 189 mark. We should be good to go 230 and 280 going forward. But that's the last wave, so let's be very careful in handling that. If there's any change, we'll come back and discuss. Ripple should be good. I mean, Ripple has already made a small high. So what you can do in continuation to the story where we were, I think we kept the stop loss around 2.2, correct? So maybe you can move it to a break even, whichever price you must have entered. That you can move it to the break even, or yeah, that's a technical point. I mean, not above that. Okay, no higher than that low. So either we need to be around 2.32 or at a break even. I mean, don't please lock profits yet. We need to allow some more correction. Sorry, some more corrective decline if it wants to. But I think the third wave is already unfolding or it's already underway now. And if it's extending, this price action is not going to come back lower soon or retrace soon. It'll continue pushing higher, and it will not touch. Ideally, it should not touch 2.32 now. So that's a technically correct place to put your stop loss. For those who have just joined, the medium-term targets for Ripple are just around 3.7, and we are right on track. We are already breaking out of the triangle wave 4, and things are moving towards the fifth wave now. And fifth wave is unfolding, and we are in the third wave of the fifth wave. Okay, so we still have third 3.5 waves completely for the target. All right, so I'm done with this session now. Thank you again for joining, and we'll be back again now in London Open, and back to you, Igor. Thank you.
Thank you very much, SPDas. Always a pleasure. Alrighty, folks. Well, thanks for tuning in. We'll be back, as SPDas mentioned, for London 5 a.m. EST. Those, pardon me one second. Just got a little bit of an interruption here. Yeah, so 5 a.m. EST, and of course, back with IT Trader at 8 a.m. EST. Please convert those time zones or just check out the X posts. We've got that for you. One, two. Uh, try that out. Anyways, more coming, more updates coming where the wallet's pretty much hooked up. Uh, the AI agent is being tested by the internal team, going really well. We've posted some of those results for you in the past on X. Really cool to watch because the confluence points are all there, and with our analysis, with the live trading, with the live sessions. So yeah, so that's going to be a lot of fun once we get those data points in there. Just super excited to get all this released. Big updates coming, especially for Friday. That's the goal. We push code on Fridays. We That's just how it goes because we're still here on Saturday and Sunday, but some people aren't. That's fine. Anyways, it's been a blast, always a pleasure, and see you in the morning or your evening, depending on where you are, for the London 5 a.m. Take care.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.